Hey, Bobby. Hey, Cunio. Alright, I think my hair is kind of messed up. I ain't gonna lie to you. I just took a Oh, Lee. Hey, hey. Holy chat. Hold on 1 second. 1 second. My hair's cooked. Oh, oh, no hairline. Yeah. I'm gonna give you some braids, though. I'm gonna give you some braids. I'm gonna give you some braids. Chat, I'm gonna give you some braids. Chat, I'm gonna give you some braids. Don't worry. I gotta let it go. I just gotta let it grow a little longer because I checked it out and last time I did it, it was short, so I cut it off instantly. I not cut it off, but I ended up instantly. It was too short. I need to get a little longer. So my hair's kind of messed up. It's kind of messed up. Ay. Zak de Bayo. Bayo de Bayo. All right. You caught me. Okay, let's get to the straight to the charting session here. You get the SMT. Gosh. Ne, era fora nisso, live sembora. Ma live sembora ne tremego. All right, chat. 1 second. 1 second. Let me do some charting session. Monday, we had no setup. We're looking for we're looking for a short. We looking for a short on Monday, but our boss was wrong. Supposed to be looking for long Tuesday. No setups Wednesday. We're looking for long still. Market never offers a long entry here. And on Thursday, we did have a long entry. Friday, we had no trades. Market strongly just got met. That's how that happened. Okay. Daisy. I took out the model one itself. Stop loss, right below body. Big profit. Right. All right. And I took a loss. Something sure somewhere here. Where was the loss? 6 a.m. candle. Boom, right over here. Took the loss. You took the loss, shit. Okay, 6 a.m. Tuesday. This is. So this day I took a loss. I think it was -1 RR. This one I took 5 RR. And on this day I took a long entry. All right, let's start it off. -1 RR, -5 RR. This is how I ended up on a -1.5 RR week, which I lost -1 RR here. I'm pretty sure this, you could say, a somewhat of a negative 2 hour week, because I lost way more than initial here. I lost some over here as well. So now I think pretty sure over here I lost around 1.2 RR and eventually lost like 6.7 RR, something like that. Like 0.6.7 RR, which is basically 2 RR this week. But we could have made it all back on this Thursday trade, which we did take this trade, by the way, keep that in mind. We did execute this trade, but we were too greedy and we never partial. But there's definitely a great lesson out of all of them. But there's definitely a very, very big, great lesson from this week. The Thursday trade especially. And I will tell you guys why and how did I get greedy and how can we solve that greedy problem. Because, I'll tell you guys about that, don't worry. But let's get straight into it. Straight away, our high to adrenaline liquidity throughout the whole week was just bullish here. I was just bullish throughout the whole week. First of all, some people said like, oh yeah, I was bullish. On Monday, I was actually bearish, which I faced a loss. And that's why our boss on Monday was wrong. You're supposed to be bullish because last week, I forgot I checked that last week had a S&P divergence with the weekly CRT and weekly SMT right over here. So you had a weekly SMT IRL to ERL, right? Weekly, CRT to the upside as well. On this, this candle had a for this weekly candle ended, it gave a model 1 confirmation to this candle. So we had a 4-hour model 1 confirmation to that candle. As well, we had an SMT with this other, weekly candle before we broke through to the downside. So on Monday, we were meant to be bullish, but we were bearish. And there's definitely a great lesson on Monday trade. But if we would just go bullish throughout the whole week, we would have had only one setup, which would have been the 2.6 hour win. Everything else would have been no setups there. Now, our higher time bias was overall, my Monday had a shorting bias here, because I did not see the S&P divergence, which was that's a great lesson throughout this whole week. Very, very great lesson. On Monday, I was looking to short it down. So I thought, we're in premium. We had a weekly daily series to the downside. We had all of that, but I forgot to check the correlated pair, which the correlated pair had a S&P divergence. So it did not make sense for the market to go anywhere lower here. We're looking to long it up. Although the market did go up, did go down there, but guess what? If when it went down there, we never had opportunity to long it up, so we never got stopped out. But as you can say, probably, well, you're down negative 2 RR, so you definitely did lose. But those trades I executed were not my trades, meaning they're not in my rule. They were just lessonable trades, so not probability losses. As you guys know, the only time you actually want to accept a loss is when it's probability. In this case, to me, these two trades were not probability. This right over here was a probability win, which we messed up on. We could have been up on a week with a pretty sure 1 RR, but we fumbled that. And I will tell you guys about that. That's the Thursday trade is the most greatest trade ever, right? Because the lesson out of it. But on Monday, we're shorting here. Our boss was wrong because I did not see the weekly S&P CRT to the upside. So, that's what led me to having this bearish, that's what led me to having a loss here, because I was supposed to be bullish here. If you go on Monday here as well, this is Monday. This is when it started. Right on Monday, I'm pretty sure market went lower at 17 o'clock, went below this other day's candles low. So right on Monday, we already had an SMT. So this low is protected already. So since we had that, I was still looking for shorts because I was okay, it's a weekly time frame. I usually look for SMT on the daily and the 4-hour time frame, but that was proven to be wrong. And I'm meant to be looking for it in the 4-hour daily and the weekly SMTs, right? So I went against the higher time frame bias here, and I took a short right over here. You can see, took a short because during that specific time, we had an SMT divergence, and during this time, I was okay. The SMT happened 2 different times, so did I make a mistake there? And eventually checked out, no, I did not make a mistake, because SMT can't happen at the same time. It does happen, the same 4-hour candle could happen, but it can't be, it will not always be perfect. So it did not happen the same hour. I mean, this one did happen the same hour. I was like, okay, did it supposed to happen at the same time? But that rule, that theory was fucking bullshit. It just had my bias wrong here. Every rule was accepted, but the bias was wrong. So yeah, the lesson of this trade is, you can see we entered a resistance block, but that's into divergence. So I was like, okay, we're shorting it down, looks pretty good. it seemed unrealistic. It seemed really unrealistic to me as well. Like, bro, usually trades like this should not offer this much RR here. I'm wondering, well, you took a 15.5 RR, but sometimes when a trade looks too good, usually gonna fuck you up. But it's not always like that. It's probability based, right? So this trade, the reason we lost here was primarily because our boss was wrong. So the lesson of this trade is during the Saturday or Sunday trades and throughout the week, I should be, and I will be, and I will, and I do, look at other pairs, the correlated pairs like GU and DXY, especially during the Saturday starting session or the weekends. Look at those charts, see if there's a higher time frame S&P divergence on the daily or weekly that could affect our potential bias here. So that was the lesson. The lesson is based primarily to look at the higher time frame, daily, weekly, and the 4-hour. See if there's S&P divergence with the correlated pair, because as I said, S&P divergence affects my bias. So the reason we lost this trade was because I did not look at the correlated pair and did not see the weekly SMT arrow to arrow, as well as the weekly SMT CRT to the upside. I did not see that, so that led me to taking this loss. So from now on forward, what I will do is I will always, during the weekends and throughout the week, I will look at the correlated pair. Okay, look at the daily and the weekly. Okay, is there any S&P divergence here? Is there anything that is going to prevent from this high or this low getting souped? So the lesson is I will from now on forward look at the weekends and the weekdays throughout the week. Look at the higher time from the daily or the weekly. Look for S&P divergence that could potentially help us with our bias and help us read the market efficiently better, and I hope help us avoid losses, because S&P divergence does affect our bias here. Keep that in mind. So yeah, that's the lesson of that trade. And on Tuesday we didn't trade because the day before FOMC press conference, you can see Tuesday was fucking tweaking. If you were a Tuesday on Tuesday, I found my bias being bullish here. So on Tuesday I was looking for longs, and I did definitely had a long potential. You can see it over here, the 5:45 a.m. kind of had a long, but it happened the wrong time. But he never really delivered here. He never delivered. Market eventually stooped it out. So you guys know our rules will usually cause the action to happen, and during that time the movement didn't. There was not the actual move that was going to happen. So market really never offered, respected it overall. Because since we're trading on Monday and Thursday, Monday through Wednesday, we're going to target the higher time. We're trying to target the higher time so we can get more RR. And Thursday and Friday, we're looking to go for more risk take profit because the weekly candle has to close in a fair price. So this one overall did not deliver at all and eventually failed. You can see it has stop loss. So that's why we're not trading. That's why we gotta wait for our route to be there. When it's the perfect time to trade, the perfect time to trade is always when our rules are there. When our rules are getting respected, that is the perfect time to execute a trade. And another loss we happened was on Wednesday during the FOMC. We're wondering, well, whoa. So did this follow my rule? This one did not follow my rule. I fucking trade the macro, as you guys know. I do not know why I'm trading the macro. I think I'm having I'm having a problem where it's already fixed now. But I had a problem where I wanted to be ICT. I wanted to act like I'm ICT. I wanted to make some new theory, which the theory does work. Keep that in mind. Theory does definitely work, but the 1 minute time frame does not fit my way of trading, as well as I'm not ICT. Everybody's their own self. I can't act like somebody else. I'm not that guy. I'm my own self. It doesn't suit me. It makes me force trades because 840, 950, 1010, and 1050 to 1110 will always be there. Since they're always gonna be there. As you guys know, high probability setups does not happen every single time. So it does not happen every single time. And the 950 or 1050 will always offer a setup, which is they're the macro, right? So I just trying to make some bullshit theory. And the theory does definitely work. I said it definitely does work. I had a 30-hour trade with it. But the thing is, it doesn't suit the way I trade. It doesn't suit me. So it doesn't suit me. I'm not going to, trade it because it doesn't suit me. I'm not good at 1 minute time frame, especially with the 1 minute time frame. There's a lot of spreads. There's a lot of, in the 1 minute time frame, you're gonna have tighter stop loss, so you're gonna increase your loss size. So as well, you're gonna have higher spread, so you're gonna lose way more than initially supposed to lose. As well as it happens every single day. It's more the 1 minute time frame. There's so much that happens in a 1 minute time frame. Overall, it does not even suit me. So now from this trade, our lesson is, and probably wondering, well, your setup was here, the Model 1's here, why did you not take it? The Model 1's not there because the 5 a.m. the price didn't happen at the right time, which is between 6 a.m. and 10:30 a.m. As well, the Model 1 was not the right Model 1, and they both must be there. In this case, you can see this setup that happened to the upside, the time was in there, neither was the Model 1 was in there, right? So you can see overall they both did not deliver. Whenever our rules there, it was just when we're very confident this will be the actual move to deliver, which in this case, you can see right over here, did not deliver at all. And just keep, why am I not saying this one? All the people were thinking, well, when could this still go up high from here? What do you mean did not deliver? Because keep in mind, this is Tuesday and Wednesday. These 2 days are very important for the higher time frame drawn liquidity. That means you can literally swing these trades on from Monday to Wednesday. But we're doing, well, this one did not deliver. This one still went down. This one did deliver. How come? Because Thursday and Friday. Thursday and Friday markets are closed at a fair price. So overall, this one did deliver because Thursday and Friday we go for more rich take profit. We did not go for honest take profit. So this one overall did deliver, and this one did not, because this one we could have gone for the higher time frame, which overall did not deliver. Right? You can see the differences here. So the lesson on Wednesday, we lost I'm pretty sure 0.74%, which yeah, that's how much we lost, because the spread, I said, spread made me lose way more. The entry was very fucking off because of the spread. As I said, we were having a side of stop loss, so we lost way more initially. And the lesson of the trade is we're not gonna trade macro anymore. It does not suit me. Make me force trades. You're gonna be there every day, and the high probability setup is not there every single day. My high probability setups are there once a week, two times a week, or not even a week, right? That's what led me to having this loss. I'm not gonna trade macro anymore. I'm not a guy who trades like to trade a 1 minute time frame. It's too much going on there. It's not suit my style. The whole reason I go and drawdowns because I make fucking new bullshit theories, which I'm saying, as I said, it's time to move forward, which will not happen again, which did not happen again the next trading day. We move forward, but when we encounter a new problem, when we face a lot of problems on Thursday, we're looking for longs here. As I said, the whole week we're looking for longs. On Thursday, still had a SMT, weekly SMT IRL to ERL, weekly CRT SMT to the upside, as well as CRT was still getting respected. So we're still looking for that long. In a daily time frame, before this daily candle closed, we had a SMT there, as well as had a daily CRT as well. We had, we're in discount of the daily range. We're going from an SMT ERL to IRL. That's what we had on a daily time frame. Now if we go to the 4-hour time frame for the market narrative as context, we had a new growth profile 1 accumulation, 5 AM mid-pitch and 9 expansion. 9 AM expansion to the downside, but you can see the 5 AM overall didn't meet our drawn liquidity, so we're fine. We had over here a daily range as well. Market slipped at a high, slipped at a low, stable high, and eventually made a stable low. We're in discounts, so you want to buy. Eventually, the daily range was right here, right? You can see the daily range was right over here. So I was like, okay, we're good. We have the context here. We relatively still did have a bullish, bullish order flow during this time. Eventually, now for the market to go back in a bullish order flow, it needs to go above this high right over here for a bullish order flow. But during that time, we did have a bullish order flow because the last high that had SMT, and it got a closure above. You can see market broke above the highs, so the order flow is still there in our side during that specific time. But right now, currently no longer with us. But if you go to a lower time frame, we had SMT over here. Well, so we're looking for our number 1 right over here. Model 1 happened at the right time, between 6 a.m. to 10:30 a.m. Eventually, we had the right Model 1, which was this candle right over here, and we could tap it. So the first time I was not looking to execute a trade at all unless it had the threshold. But I eventually found, okay, market did a big impulsive move to the upside. If the market retraces all the way back to the threshold, it wouldn't make sense. How would it not make sense? If the market did push up all over here, it doesn't make sense for the market to go all the way down here and go up high. It doesn't really make sense. That's too much money going away in their way. So they like to go like, okay, go over here, then go up higher, right? Without doing all the way down here just to tap it back in. Logically, it wouldn't make sense for the market to do all the down there, since the market is controlled and this algorithm, which it doesn't really make sense for the market to go all the way back to the threshold after doing a big ass impulse move to the upside, if it does to go to the threshold, it's probably gonna stop us out. So it wouldn't make sense for the market to go all the way back to the threshold and go up higher. Because this is in case I was trying to enter on a threshold, but I eventually found out, okay, this candle, we're meant to enter the threshold, but market, since the market did a big, push to the upside, big impulse move to the upside, it doesn't make sense to enter the threshold anymore. We're gonna enter the Model 1, but we're gonna put our stop loss below the body of the Model 1. Why? Or above the body. Why? Because since it does not make sense for the market to enter on the threshold, since it doesn't make sense for the market to go to the threshold, we're safe to put it on the, on the body. Body telling the story, wick doing the damage. So we're relatively safe. But it was definitely going to loss, by the way. Keep that in mind. So we had an entry here. Boom. Stop loss. Take profit 1. In this case, people wondering, well, how did you get greedy here, T? I have my take. I had another take profit, which is like, I had another take P, which is right over here, which never got met. And if market fully reversed. And so on this trade, we didn't make nothing. But we could have definitely made everything back here. Am I mad about, oh yeah, I didn't make my fucking profit on the week. I'm down in a week. No, not at all. This exchange was such a beautiful trade because I could have profited out of this high I could have profited out of this candle to the upside and still made the same amount of money. But I didn't do it because I was like, okay, I do not want my mind to distract me with profits because I knew I made a mistake here. I knew it was a beautiful lesson because I took a trade like this. I was like, oh shit. It's a new way of entering the Model 1. There's a big lesson at this because if I were to get out here, I wouldn't really give a fuck about me entering here. I wouldn't give a fuck about the lesson. Profits in the mind. Am I that type of person? No, but I do not want it to happen. So I don't want it to happen. I'm gonna let this shit run. I was like, okay, I see this going to loss, very, very high likely. I'm not lost. I mean break even. And it did go on a break even and it went to a loss. But there was 4 fucking very, very viable lessons from this trade, which I would exchange me losing $2,000 for. This is I'm losing nothing. I guess I'm down a week. I'm down like what, probably like 2,000, like 1,100 or something like that. But I would exchange $5,000 just for this lesson. Because this lesson overall helps on a longer term basis. Now this lesson helped my Thursday and Friday trading rules. Because on Thursday and Friday, I just set, a expectation to just go for take profit. But what's a risk to take profit? Where? This, there, this, that, where? Where's the risk to take profit? Where should I actually go to? Which this trade told me where to actually go to. This is why I said I would exchange me losing 5,000. Possibly even 10,000. I don't give a fuck. I will change, I'll change anything. I have money. I have fucking money in crypto. I'm making a big bag out of this fucking Ethereum, Dolan. I'm making a big bag out of this shit. I don't give a fuck about losing 5,000, 10,000. I could lose, if this lesson were to cost me 100,000, I would pay the 100,000. I was wondering, well, I could have cashed the 100,000. Why didn't you do that shit? The lesson is more important than the profit. When you become rich, it's not about the asset you have, it's about you. What you become is what's important when you become a millionaire, whatever. And we're in a track of that, becoming that as well, and we'll definitely achieve that. So the lesson of this trade was a break-even trade, which I'm pretty sure I lost like $10, which is nothing, right? So the lesson of this trade is one thing, and one thing only. The lesson, no, not one thing only. There's multiple things. The lessons are when I'm supposed to enter on the threshold, but the market did a big impulsive move to the upside or downside, and it doesn't logically make sense for the market to go all the way back down or up to the threshold, then go lower. If the market does not make sense to do that, what we're going to be doing, we are going to be entering on the Model on itself and put our stop loss on the body or below the body or on the, we're gonna put our stop loss above or below the Mod 1 body, because wick doing the damage, body telling the story. Since it does not make sense for the market to go back all the way to the threshold, that stop loss would be a little safer and giving us more RR, giving us a higher mid-rate to high risk reward ratio. And I'll probably wondering, well, don't make some bullshit theory. Don't make some bullshit theory. I'm not gonna make bullshit theory. I do have this is all backed by proof because I'm wondering, well, how did you know this, T? How did you know this? By fucking paying attention and going back in a chart. Because I can give you an example of this happening again. Like it was last week. Right over here. Where was last week? I want to say Friday last week. Was it Friday last week? It's not Friday. No, not last week. The week before that. The week before. Right around here. Oh, not neither that. Neither was it that. It was somewhere right over here. Oh, and then, whoa! How the fuck did you know this specific candle? Come on, man. You know, you guys are in the CRT inner circle traders world, man. That guy. So this one, market, you can see this is the number one. Market did a big impulse to the downside. It doesn't make sense for the market to go all the way back up to the threshold and go lower. Yes, in this case, you're supposed to enter the threshold because the market is fucking, the candle is big, fat. And as you guys know, RR is better than anything. It would, as I say, we're entering over here. This is supposed to be the actual entry supposed to enter. Market doesn't tap it. We're good. We don't give a fuck. You know why? Because RR beats anything. And it's, you know, sometimes it may not even tap our entry, just go away. Doesn't matter. As we know, the longer term basis, it will help us to give us more RR, make us be profit on longer term basis. So in this case, when the market did a big impulse to the downside, it doesn't make sense for the market to go back to the threshold. So what you're gonna do, enter on the body itself, or the model one itself, and put your stop loss right above the body. Wake doing the damage, body telling a story, enter there, and market goes lower here to draw on liquidity, and that's what happens. I'm pretty sure there was another lesson like this. It was a little while ago. It was another lesson like this trade, but that lesson, I do not have the specific price point, but I did see this happening a little backward. I did see this happening a little days before that. I'm pretty sure. I think it should be somewhere around here. It should be behind this, but I'm not sure the specific price of it. But it did definitely happen. You know, back in the time. So it happened multiple times here. So we have proof. We have evidence. How do we build confidence? By having evidence. If you don't have confidence, you have to build evidence for that theory to work out, or whatever you're doing to be, you know, to know, okay, I'm gonna keep executing because I have evidence. I don't need to have confidence. I personally don't need to have confidence because I have evidence. So that's the number one lesson out of that. A second lesson is, as I said, the Thursday and Friday rule I had was, I said to go for a take profit. I didn't know which specific realistic take profit to go for. I said, okay, the nearest daily objective, but since it's Thursday and Friday, it goes in a fair price, it needs to be the most realistic take profit, which is just the 4-hour CRT highs and 4-hour CRT lows, are the hourly CRT highs and CRT lows. When do we do trade the hourly CRT? When it's a new continuation or a new cruiser profile 2. Otherwise, using the 4-hour CRT, which is the new continuation, as well as in the new cruiser profile 1. In this case, with new cruiser profile 1, just using this 4-hour CRT high as a take first and final take profit, which, as I said, this one I didn't make anything because I was trying to go to the second take profit, which I thought it would have gone to, which we never went to. And eventually market, stop us out, break even. And other lesson is, that's the second lesson. The lesson is, on Thursday and Friday, I will only go for the 4-hour CRT or the hour CRT range that I'm supposed to be going for. So if there's a 4-hour CRT range, I'm gonna go there only. If there's an hour CRT range, I'm gonna go there only. And if there's, let's just say I'm using a 4-hour CRT range to enter on a different 4-hour CRT range, which is bigger than that 4-hour CRT range, I'll go for that bigger one. In this case, what I mean by that is in this case right over here, right? On Friday, is a perfect example. On Friday, we had a bigger range, but we're using the smaller range to go to the bigger range. So our main take profit is going to be the bigger range because, it is in the 4-hour time frame. It is primarily in the 4-hour and hourly time frame. And it's, I'm saying 4-hour time frame right over here range. So primarily take profit is going to be the 50% mark because it's Friday, it's closing fair price. 50% mark of this 4-hour CRT, our last and final take profit. But we can use a smaller range to go execute to the bigger range here, which overall That's what I mean. So on Thursday and Friday, I will only head to the CRT HT low of the 4 hour/1 hour, because now this helps us avoid partials. This helps us make the whole. So if we're gonna make the whole pie, right? And the next lesson is, I am not greedy. What my take profit can say, I will partial and break even no matter where the market is. Is it if the market gets to up here and if I got to partial and the market's all the way down here, I'm gonna partial here. I don't care. Right when my take profit gets met, I will not be greedy. I will not be greedy. I'm not trying to make the whole. I'm not gonna wait for the market to go all the way back up here and try to partial again. Right when my take profit can say, no matter where the market is, I will partial and break even, because making something is better than making nothing. Having motion is better than having no motion. I'd rather take a piece of the pie, not the whole pie. Because when you take the whole pie, you're greedy and you're gonna fuck up. And how you guys know, when you guys eat so much pie, you get sugary, you have diabetes, so you have consequences. So taking a piece is better than taking nothing. Having something is better than taking nothing. And that's the lesson of that trade. And the last lesson is of this specific trade would be, I have to think in my mind here. And I think that's enough for that. That's a lesson. And yes, I just found it, which is the last lesson is, why and how did I become greedy on this? Why I could literally tell you guys how I became greedy on the trade when I'm not supposed to be greedy. How did I become greedy on this trade? Because I risked 1% and I only needed a little bit more percentage gain for me to pass the account. I needed a little bit more percentage gain for me to pass the account. Like, okay, let this market go up a little bit higher, then I'm gonna get out the trade, because I need a little bit more to pass the account. I don't have to wait. No, none of 2 trades to fucking pass the account. Let's just go a little higher, which that was a problem. That made me greedy, and that is why I then impartial. I didn't get out of the trade, but I was still I'm still happy with the lesson. But the other lesson is, I will start risking 2% because I only need a little bit more to pass the account, and which I did fucking, that's what made me pass the account. Like, it was getting very close to passing the account, but I did it. Why? Because I risked 1%. I need a little bit more, so I tried to force the market to keep on going, which I hoped, which you should never hope. Right when hits the take profit gets met, partially break even, nothing else. And the reason why I didn't partial here, first of all, greedy. Second of all, I just needed a little bit more to pass the account, which that is what led me to making nothing. And the lesson is, from now on forward, every trade I take on challenges on phase 1, phase 2, yes, phase 2 as well, I will be risking 2%, always risking 2%, because now that helps you avoid trying to, go for an unrisk take profit. This helps me avoid, going for the right take profit and not being that greedy, because I'm risking the twice the size. And this will help me, pass the account faster without me being concerned of me, what if I need a little bit more to pass the account. And you should never do that. You should always trade the process. You should always trade the chart, and not your data and not your feelings. But that's the problem I had. As you guys know, humans makes errors and mistakes. So the lesson is to trade the chart and the data, not my feelings, trade the data, and not my P&L. And that's what I did. And we faced the consequences, but the great lesson out of the trade is to every trade on challenges, every single trade, I don't care if I blow that shit up, I'm going to be risking 2% on challenges and 1% live / when it counts. And that's going to be on that. And that's the last final lesson of that trade. And on Friday, there was no setups here. The reason there was no setups on Friday here was primarily because, market never souped out the hourly range or the 4-hour range low. Each market just went up higher and then it just went back down to close of the, weekly price range. Market went up all the way here just to, close at a fair price. You can see market over on Friday, we still had a bullish basket. We're looking for a Friday retracement because market did a big dump to the downside. It wouldn't make sense for the market to go lower because the weekly objective already got met, which to me, I was looking to long it up, but market never gave opportunity here, which my take profit is right over here, which the drunk just got met. I was like, okay, I'm done for the day. My take profit got met. I'm done. Market never offered me entry. It is what it is. But yeah, that was the lesson on Friday. Nothing much happened. Market just a market recap. I did not try to make my money back on Friday because although okay, I was down in a week. This could have made all my money back. I'm not going to be coming in Friday trying to make everything back. No, we're in a professional state. We're in a professional industry. We're not fucking gamblers. We don't do this shit. Since we don't do this shit, you know what I'm saying, we don't do that shit. We don't fucking come in Friday trying to make everything back. Fridays are literally one of the worst days to trade. So what the fuck is trying to make everything back on a fucking Friday when it's the worst day to make everything back? Right? It doesn't make sense. And we should never do that as well. But yeah, this is a lesson of the week. Very viable. Thank you for watching. Make sure you guys like, comment, subscribe, share, and join the discussion down below. You know, we got Pay Signals groups, and we have evidence on Pay Signals group. Make sure you guys join that. And yeah, very beautiful lesson. I love it. I love it. I love the week. I would exchange anything for these lessons. Although, you know, people wondering, well, yeah, you said you could have made this money, this, that. On the 30 trade, I'm happy and more happy. If the market just say more go up, I would be way more happy for the market to go back down and stop me out. Because when I go back down, I'm searching for the answers. When I'm going up, my mind tends to distract you with profits, which should never let you happen, which doesn't let me happen. But I don't want that to happen. So, as you guys know, a winning trade is not excite us, a losing trade is not phase us, a missing trade is not concern us. And it's all part of the process. We're cold, calm, losing streak, when winning streak. When we win, we feel nothing. When we lose, I feel nothing. When I'm right, I feel nothing. When I'm wrong, I feel nothing. Nothing. Process, strictly business. We use our losses and wins for areas of improvements. If we make this mistake once, we never make the same mistake again. I never made the same mistake. I focus on the process, I focus on the process, not the outcome. I focus on the long term, not the short term, and it's all part of the process. Beautiful fucking week. I love this week. Literally, now this tells me, okay, simplicity on the Wednesday trade. It says, okay, I have to be simplicity is key. I don't want to add some fucking very complicated rules. Simplicity is key. That's why we don't trade the macro, because simplicity is key. The 4 hour to 15 minute and the hour to 5 minute is very, and it's a higher time frame as well as very simple. But I have it the 1 minute time frame being so much candles. Simplicity is key. Do not fucking do too much, because if you do that too much, you're gonna fucking fuck up your brain. So yeah, very valuable week. Thank you for watching. I'll see you guys later. Peace out. Hey chat. Yo, what's good, my boy? What's good, my boy? Man of Parmo, yo, what's good? Well, how's trading going? Very good. Yo, my boy said, what's good, trader? What's good? Yeah, I don't know if you guys are watching, but hey, I had to make the video. You know what I'm saying? I had to risk it. I had to risk something. Okay, I had to risk something. Alright. Now let's go over the higher time frame bias, paralysis, analysis, paralysis. Yeah, bro, 2% on trade makes sense. Yes, sir, ski. Bro, I mean, because you know, it definitely makes sense. Why on a challenge phase? Because I'm getting greedy, because I'm like, oh, I need a little bit more to patch the account, and that's what makes me fucking fuck up my trade. So risking 2% now. This is means okay. I'm risking so much here. I want to be going for, you know, good take profit, good stop losses. I don't want to be fucking around. You know what I'm saying? Makes us better. As well as I already have a 100K fund account. The 100K fund account, the way I got it was risking 1%, but I'm not gonna lie to you guys. When I had the 100K fund account, when I got it, I'm supposed to initially have a 250K account, but when I got it, that shit took a long time because I was constantly making mistakes, right? I learned a bit that even though the mistakes overall did go in profits, but when I did that shit, took so fucking long. And my mind is like, you know, my mind ticks out right here because, you know, I need a little bit more to pass that shit, and you know, this fucks up my brain. When it fucks up my brain, that just talks about, so you gotta risk a little bit more just to pass this shit, because you know, the trade we're taking, like I said, we take another 15-hour trade, and if we take that shit on a demo on a fucking challenge account, it's not gonna pay us off, right? It's not gonna make us make money in real life. It's not gonna, we can't get a payout out of that. I mean, that 15.5-hour trade, I did definitely make money out of that. I literally made 150%, you know, on my fucking small live account. I risked about $100 and I made 1,500. Beautiful. You know what I'm saying? And that one, I didn't even pay attention to the trade. I just fucking, I placed the trade. I forgot to, partial shift. So I just made it straight away 15.5 RR without doing any partials because I literally fucking forgot about that shit. But yeah, set and forget. Shout out to Alex Z for that shit, man. But that's not that good as well. Today in this trade, I tried to say and forget. Did that paid off? You know what I'm saying? Life is cooked, but trading going to hell yeah, man, going way too. Yes, sir. My boy Alwin, how's your trading go, bro? My boy said I forget. It says right over here. It says nobody's watching, but my boy Alwin is watching. Okay, so my boy said, how's trading going? My trade is going fantastic, bro. How's yours? My boy Alwin? Long time no see, man. OG. My boy Trader and Alwin's old the OG ones, man. Hey, shit. Yeah, my boy Trader. How much you down on your account now, brother? Or are you up or down? Yeah. Crazy man, hell yes, sir. That's good, brother. That's good. That's good. That's Gucci. Hey. Trading going so fine. Yes, sir, man. How have you been, doing good, bro? I've been cooking on crypto, though. Holy shit. Day ones, bro. Hell yeah, man. Type shit. Bro, we're cooking. I'm still holding this shit, chat. Hey, I'm not gonna lie to you guys. I did not parcel on this shit. I'm holding this with a 30x leverage. This bitch right over here. I'm holding with 30x leverage. Bro, but I can't give the money though. Fuck it. It is what it is. I mean, I don't even put that much, what I'm saying? But I'm up hella bread on this. Risking little, but making a lot in crypto is crazy, bro. Crazy. This shit is still stagnating, bro. Yeah, bro, down like 6%. How, bro? What the fuck? We just got your drawdown. How did you win back? How did you win back in? How, brother? Hey, crypto tweaking up in his bitch. I didn't even stand much on this. Getting crazy, bro. You cooking crypto? Hell yeah, bro. I gave this call out as well on the Dolan. I gave it a 5 million market cap. So those who took it, you should be up 100% on this. But I'm up like 400% because I bought around the $2 mark. Hey, this shit is backed by this right over here is backed by Luke Belmar, that guy on Twitter. That entertained guy, whatever this guy's name is. I think he calls himself Top G or some shit like that. But yeah, bro, my boy Trader, how the fuck are you winning back a drawdown, bro? Crazy, man. Yeah, Trader. Yeah, so you had Trader. You had the same problem as me, bro. So your bias was wrong, bro. You gotta get your bias correct. Yeah, the lesson was like, we gotta keep in mind, chat. Make sure you guys remind me to look at the different pairs. I keep on forgetting to look at GU and DXY because the SMT affects your bias. And as I said in my video here, SMT divergence definitely does affect your bias. So we wanna look at the other pairs every throughout the week to know in the higher time frame. Bro, market and trading right. Yeah, the shorting you had on Friday, I think it was on Thursday. That was a beautiful fucking short, but you know what I'm saying? The only way you would have survived this short is if you would have at least waited for a deeper retracement. Because, if you're shorting down here, it wouldn't make sense, This short to the downside doesn't make sense. If you, I'm pretty sure you shorted somewhere around here. It doesn't make sense, I don't know why you shorted down here. What time did you short, by the way, bro? What time did you short? He was tweaking, bro. It just consolidated. Over here, yeah, bro, but like you gotta keep in mind, bro, that this retracement is not that big. So like right over here, this push to the downside, this retracement is beautiful because you can see overall did do a big ass retracement, but this right over here, you can see that retracement wasn't that deep. That's why you gotta go on OTE here, right? I'm wondering, well, the OTE did get met here. The 50% mark did get met, but Usually want that 62 to 88. Usually want that 0.62 to 0.886 mark to get tapped, then short it down. Because this, retracement does not look big. Because you gotta use logic in this shit. You gotta use logic. Use your brain a little bit. 6 a.m. sweep. Yeah, so you had the 6 a.m. sweep right over here. Boom. At 7 a.m. give the entry and eventually short it down. You usually got stopped out as well. Yikes. See, the retracement wasn't that big, bro. Usually wanna if this retracement is not that, you gotta this is where you gotta use your feelings. In my eyes, this retracement is not that deep. So I'm looking for a deeper retracement. So a deeper retracement would be like the 0.62 to 0.86, not a 0.50% mark. The 0.50% mark does not look that of a deep of retracement. This one does. And you can see this is where the market reflect out of it. Right when our take profit got met, it recently reflected back to the downside. You know what I'm saying? So yeah, that's how you could have fixed that, bro. I was so down, bro. I was so down broke at one point, but yeah, got up like a man, came in and cooking. Life is good. Hell yeah, bro. Hey, I saw that downside as well, bro. He told me about that, bro. He said you were down a lot. You were about to quit trading, but you back up, bro. Hey, great to see you back, man. That's some real shit, man. And also the best way to deal with that is just to shut up and do the work, Even with me, when I had a problem where I lost, I think like when I lost at $12,000, in one trade, I was like, I wasn't down. I was down as well, bro. That affected my emotion a lot. But I did, it didn't affect me that much because I made my money back. I mean, I didn't make my money, but I did have an ROI on there, right? So that trade was all accepted, but that shit did affect me mentally. So eventually, I was like, I didn't even talk to the other guy. I just shut the fuck up and got back to work. Eventually, came right back to the top. Made way more than 12,000. So that's great as well, bro. Great to see you back, man. That's nice. And bro, if you guys are trading gold, you guys will know that $12,000 is not that much trading gold, bro. Gold was moving. You know what I'm saying? Like my recent client, I could show you guys the screenshot. This is my recent client right over here. Like 40% return in one trade. Hey, the account capital is low because I told him, okay, you gotta, he used to, first of all, being a live account, eventually put a couple thousand. He said, I want to put like, 7,000 in there. But let me get the hang of it. But right now, his current trade, let me get the screenshot here. Where is the screenshot? Where was it at? I think I deleted it. Right over here. Like gold is crazy. That way I made my 12,000 just from fucking gold trades, 40% return on a what? On a fucking on one trade. That's great. But he's telling me like, I'm saying I'm like that. I'm investing in gold, bro. Yeah, this guy is not if investing in gold is much, I mean, you did say you had like a 30% return, right? Man, you should be doing that shit in crypto, bro. Like I'm saying way better, but it's way more dangerous, but the ROI is way higher. Like, bro, getting a 400% return in a couple of days is crazy here. 100% return just on this shit. And like, let's not talk about the ETH fucking leveraging the fucking Sol. The Sol one, I didn't use that much leverage, but I did because I had that much fucking capital. I was like, this is my remaining little capital that I can use to long it up and short it up in crypto, which is a couple of thousand. But bro, making a 400% return just from this price point is crazy, Right over here, that's crazy shit right there. 15K less to make my first 100K. Yes, sirski, man. Yes, sirski, man. Congrats, man. Congrats, my boy. Like these sessions, like sessions like this. Saturdays, damn. Saturday charting session and Sunday charting session. The weekends are very important for trading, Going back, reviewing it, going over the week, talking about trading. This switch is gonna get you higher. But damn, my boy, I think that chat. If you guys are still looking to enter on crypto, make sure you guys enter that shit right now. Cause since you can see, bro, ETH is getting that dominance. The ETH dominance is going crazy here. Hey, chat, is above the monthly. This is the model one in the monthly time frame. So if it goes above this, the all season has officially started. So right when it goes above this, if it closes above this, you know, monthly model one, the all season has started, man. This is a 12-month CRT here. 12-month CRT log, guys, got soup. We're going to the 12-month CRT high. Let me get a quick screenshot of this real quick. I need to get a quick screenshot. So it's just, just a little call out, Hold on, let me put that Southside liquidity. Southside liquidity. My drone liquidity is right to that high. I'll post this on Discord. We post this on the Discord. Boom. Alright, that's good. Alright, let's go over the crypto, not the crypto market updates. That's gonna be tomorrow. Let's go over the weekly market forecast on EURUSD. Weekly market forecast. Alright, on monthly time frame, we go from monthly ERL to IRL as we have a monthly expansion daily range here. What do we have on a 3-month time frame? I gotta see that. Three-month time frame, we go a 3-month IRL back to ERL. I mean, hey, President Trump did just become the president. That is bullish for USD. 6-month IRL to ERL. But as you guys know, we're not gonna look at the highest high time frame just to fucking predict. We have to look at the daily and the weekly until the 3-month / the monthly time frame is more clear. As of right now, that's what I see here. So let me go do my quick market forecast. This is my higher time frame market forecast for EURUSD, GBUSD, and DXY on the monthly time frame. And what is a market forecast? Basically, I'm going to predict the higher time frame draw on liquidity. Where do I think that my higher time frame will highly likely go to? On the monthly time frame, we have a monthly expansion daily range. You can see right here. During this time, market tapped the discounted of the daily range, eventually went up higher, daily range high. Drone did get met already, which already made signals about that, and the drone came about that already. But as of right now, what do we have here in the monthly time frame? We have an expansion daily range. How come? Because this kind of daily range got tapped and market went above the daily range high, so now we have an expansion daily range. Now, this expansion daily range is not actually confirmed yet until this candle closed in a bearish candle. If the monthly time frame candle closed in a bearish candle, the expansion daily range is confirmed. But not right now. But it does look like to be confirmed here as well in the weekly and the monthly time frame. We have a monthly ERL to IRL right over here, which is a premium ERL to discounted IRL. On the weekly, we have a weekly IRL to ERL. As well on the weekly time frame, we have a weekly CRT to the upside, which is this weekly CRT right over here. We're highlighted to go to the weekly CRT high. And will this weekly CRT high and low get met? Will this weekly CRT low first get souped and go up higher? I'm not sure. Because we have to look at the, we have to wait for the market to open and give us, confluences or give us, some sort of evidence where the market wants to head to. As of right now, I don't see this long getting souped because in the 4-hour time frame, we do have the number one confirmation to that weekly CRT. And once again, do I say it's getting this slow getting souped before going up higher? I don't know. We gotta see how the market goes throughout the week to know, okay, if this low will get souped again one more time before going up higher. As of right now, on what I see is a weekly IRL to ERL as a weekly CRT to the upside as well. We as well have a daily CRT to the upside, as well as the discount of the daily range discounted of the expansion daily range got met. You can see market shifted high to the low, stable low, stable high, premium discount daily range got tapped, so going daily range high. Eventually, now from here on forward, once the market makes a stable high here, we have a expansion daily range, premium discount of the daily range got met, so now daily range high here, as well as that's what we have. We can potentially say a daily ERL to IRL, or all the way to the to the high. As of what I see, as of right now, I say a daily ERL to IRL. As I said, the daily ERL to IRL right now is not. It doesn't look like to be that perfect, but you can see on a daily time frame there is no daily fair value gap because the daily fair value gap did get disrespected here. I mean, it didn't get created. It didn't get disrespected, but it didn't get created. So there's no daily fair value gap here. You can see that's what the market did a big impulse move to the downside because it wouldn't make sense for the market to close. It wouldn't make sense for the market to close over here. Because since the market did a big bearish to the downside, so it needs to close somewhere around here, which it did, so which made sense here. And what I actually see the market doing, potentially, we see a premium ERL right over here, which is the expansion daily range, premium ERL to discounted IRL. IRL has not been met here. From this, discounted IRL, we could go back to premium ERL and go up higher from there. So when that happens, that will high likely get this weekly CRT low get souped, but we don't know. S&P diversion could happen. Anything could happen throughout the week. But yeah, but then on the lower time in the weekly and a daily, you're more upside, but on the monthly you're bearish. As you guys know, there's a short-term drawn liquidity and there's a long-term drawn liquidity. A short-term drawn liquidity will always lead to the longer-term drawn liquidity. So they're always correlated here. It will always lead to the long-term drawn liquidity. The short-term drawn liquidity will always lead to the longer-term drawn liquidity. But yeah, to be more redefined on the daily time frame, I see a premium ERL to discounted IRL, as well as see a weekly CRT low getting souped, the eventually going high from here. That's what I see currently. Because if this were to go to the weekly premium ERL to IRL, this weekly CRT will get respected, as well as the low of the weekly CRT low. Well, the weekly CRT low will get souped. So I don't know yet until I see Friday. But to give you a confirmed and what I think, my POV, I see, a weekly IRL to ERL, weekly CRT. I see the weekly CRT low getting souped and go up higher. If it doesn't happen, it is what it is. We're human. We're gonna have human errors, but this is what I see right now. As well, we have a premium ERL to discount IRL, but the discounted daily range already got tapped. So we can go from a ERL to IRL. I mean, we can go from an ERL to IRL right over here. That could potentially happen as well because we have a CRT here as well. But it could also go false. I don't know until how the Monday candle closes. As of right now, that's what I see. And if the market gives us more clue throughout the week, we're gonna find where the market wants to go. As of right now, this is what I currently see in the market. Now, if you go to the correlated pairs, which is I think pretty sure your USD, and go to GU here. GU, we have a weekly CRT to the upside, as well as a weekly IRL to ERL. On the daily, we have a daily ERL to all the way back to IRL. So it does, I feel like the weekly CRT low may not get souped. It probably sometimes will. I mean, if it does get souped, there will probably be some sort of S&P divergence with GU. GU will probably highlight not soup out the low. Well, it will, but I'm not sure. I gotta see how the market opens that time, and how I gotta see, there's a lot of things could happen from the Asia session all the way to New York session. So yeah, that's what I got. And I don't really care how GU was going or DXY was going. I just like to care about the higher time frame S&P divergence on the daily or the weekly. Go to the weekly time frame of DXY here. Weekly CRT, how they get souped here. We do have a model market confirmation on that as well. So we have the same chart as your USD. So yeah, it's going more on the side of the weekly CRT low not getting souped and getting other weekly CRT getting respected. So yeah, let's see. I gotta see how the market looks on the New York session on Monday. As of right now, this is all I got. There is no weekly SMT or daily SMT divergences, so we're good, because SMT divergence does definitely affect our buys. So I'll see you guys later. Thank you for watching. Make sure you guys like, comment, subscribe, share, and join the Discord. Link is down below. I'll see you guys later. Peace out. And that's for that, my G's. Okay. Okay. But yeah, this is it, chat. We did everything. What I actually see this happening, what I actually see as of right now, my POV. The video kind of looked, confusing. But to be honest with you guys, says I'm narcissistic. I will see. I will highly likely not see this weekly CO2 log getting soup and going up high from here. But anything could happen. I'm not a guy. I adapt and you know just do that shit. I'm not gonna stick to one thing. I'm gonna adapt to the market condition and environment. But yeah, this is it, chat. See you guys later. See you guys later. My boy Trader, Alduin, my boy Manif Perma. I'll see you guys later. Peace out, chat. I'll see you guys later. See you guys on Sunday stream for a crypto market update. And yeah, see you guys later. Peace.